Hey everyone, Bob Kendall here. Just want to let you know before we get into tonight's video that we're very close to releasing all of our indicators. On this screen that you're seeing right now is something called the WaveTech Webs. Those have not been released. We use them in the live trading room all the time. I'm going to be introducing those to the community. You see the PPMs down below, and there are 4 other indicators that are going to be coming out. Fibonacci projections as well as cycles, some other indicators that will be used. If you want to find out how to get them, you can do 2 things. You can go to kendallreport.com, give us your email, tell us that you're interested in these indicators, or you can go in to TradingView and follow me there, Kendall Report, all one word. Thanks everyone. Welcome everyone to the Kendall Report. It is Wednesday night and we had a very interesting day. The markets were in just a complete noisy configuration for most of the morning until the minutes came out on the Federal Reserve. And what a surprise. They rallied the markets and it was like it wasn't as dovish as they expected, which is kind of odd because the reaction as I see it should have been the opposite. If you're worried about inflation, you've got a group of folks that are afraid to rock the markets. They're afraid to do the things necessary to stop inflation, and they're going to continue the policies that will cause it to expand even further or get more embedded into the economy. That's what we heard from them today. Like, okay, we need to downsize the balance sheet, all the stuff that we've heard. It's just amazing to me, and I've said this before, and criticism to the people that are running this country, whether it be in the administration or the Fed, Congress, you name it, all these people seem to be just so inept at doing anything, making any type of decision. It's crazy. And I hate to admit it, most of them are my peers in the baby boomer area. I've always said that my father was from the greatest generation, which was the World War II guys, and followed up with us, which are the worst generation, which are the baby boomers. I just don't think there's anybody worse, made more mistakes, done more things wrong, done some good things, don't get me wrong. But if you look at Congress right now, that's who's running the place for the most part. So we've got a lot of issues to go through here, but it absolutely amazes me that somehow the Fed not being hawkish is bullish for the markets. And maybe it goes back to some of the things that I talked about in live streams back in 2020 and even some in 2021, was that the market's the best inflation hedge. So maybe it makes sense that we went from down 33 handles to up a couple to unchanged basically on the day. S&P was up 0.1, NASDAQ minus 0.1 after being down, I think about almost 1% at one stage. Russell up 0.1. So basically the market's finished flat. And I think it's interesting from the viewpoint of what we're looking at. I think 9 of 11 sectors ended up in the plus column. But my biggest, I guess I'm just flabbergasted at how the markets respond to everything anymore. It's just going to continue the craziness. So maybe some reality will come into the markets. I'll go through in details here a few minutes. The technicals are, because of the way we traded yesterday, are continuing to unfold a little bit more positive. I talked about this 3-day pattern up. We're now seeing a little more traction in our database. We'll go through all the numbers here in a minute. But it's actually pretty amazing what's going on here from the standpoint of how the markets are responding to this news. Maybe it's due to the retail sales coming up at plus 3.8%. That's an insane number. That's pretty amazing. And everybody's like, well, the economy's still doing well and everybody's spending money and inflation maybe doesn't matter. We didn't see any reaction in treasuries. We're pretty muted for the most part, and we're continuing to see some steepening in the yield curve. So I'll go through all those details here in a minute. Let's go ahead and let's take a look at the WaveTech database and get into the main part of the video for tonight. So we moved up from 30% to 36.29. We did have 1,671 buy signals, 117 sells. So as I talk about all the time, this is once again a positive rotation. We need to get over 42%. If we get above that, then maybe things will start to look a little better. You can see here, as far as I'll highlight these columns here, we're looking at bullish rotations, 10-to-1 buy sells on the 1.2 model, and on the 3.2 model, we had a 17-to-1 ratio. It doesn't get much more bullish than that on a ratio basis. But overall, what we're really looking at here is just a rotation going on in the database. Maybe we get over 42%. It looks like we still have some positive potential in the markets, but we're at this pivotal point you'll see here in a minute when I go into the technicals here in just a second. So let's go ahead and let's dig into the S&P 500. So as we look at the S&P here, you'll see that yesterday's action, we traded down to the R2 was 44.22 level. We traded down to almost to S2, 44.16. That was the number I talked about. Also talked about that on the NASDAQ. We bounced basically off S2, R1, 44.87. We got up to 44.84. So we did an R1, S2. We did it a little differently. I thought we might see an R1 down to S2, but we saw the opposite happen. But the ranges were pretty much in line with what is expected from that standpoint. We look at tonight's action overnight. We're down about 750 here, looking at the potential for the range. So far, we've seen 74 to 58. 52 is S1, so just about an S1. 87 is R1. We're printing up to 4507 handle if we can get up to R2 tomorrow. It does look like that's in the cards. If you look at PPM 1 and 2 here on this page, you'll see they both have turned up and look like how we were going to fade yesterday. Just a simple unchanged made a big difference. We went from a minus 0.24 on PPM 1 to a flat, basically 0.02. So we're flat here, so it just completely flipped. Looks like we might get at least a couple more days up, maybe moving toward R2, R3. We could see a print just a bit over the 45 handle. Today, as I mentioned a minute ago, will be a pivotal trading day. And if we can close above the 10-period moving average, 44.75, that will set the tone for this move up toward the potential of this 45.44. The extreme would be 45.72. And if we get that type of action, we're likely to see the potential for even more upside. So we're just at the moment locked in this sideways range. So next market I'll cover is NASDAQ. NASDAQ is down 23 handles right now, 14,576. Just looking at the expectations for the ranges, we're trading right on the moving average, 14,599, 14,571 is the 10 and 21 period moving averages. So we're trading right there. Looking at just at the market grid expectations, 14,518 would be S1, R1 14,682, R2 14,777. Same type of configuration on the PPMs as we have in the S&P futures. So it looks very similar. There's a good chance that we get a move higher. The pivot for this today, well, if we were to close under S2 today, 14,426, that would be pretty decent size move. That would cause a failure. The same thing on the S&P futures. If we close under S2 there, the probabilities right now are all telling you that that's not what is going to happen. We're likely to see some higher prices here after maybe reaching S1, looking for S1, R2 for today. Next market we'll look at is the Russell. Been talking about this, and somebody mentioned in the comments that I have been talking about the small cap stocks would have to lead the way up to cause any type of real significant rally. And this pattern just continues to be very bullish. You see the PPMs have all turned up, all 3 PPMs. So all of a sudden, 2160 is in play, which would be a move up into these Fibonacci targets. We'd have to get above 2112, and then 2160 would be the next target that we'd be looking at, 2150 with the extreme of 2193. So that would be the extreme in this pattern. But it looks like we could trade back toward this 200-day moving average here, and this is setting a very bullish tone. As I've been talking about for the last several days, this looks like this could end up being the leader off of here, and the scenario of big downward numbers starts to dissipate every day that we continue to unfold in this pattern. Just come up real quick. We'll go through the rest of the presentation here. We'll do interest rates, crude oil, gold, and Bitcoin. So let's go ahead and get into that. Taking a look at the 10-year now, what we're looking at is a continuing move up. I've talked about this pattern a million times. This rising 10 where the 10-period moving average 1.96. If we look at the market grid, STX is 1.967. So that would be the extreme here. This is the daily. We're looking at tomorrow's grid. That was for yesterday. Tomorrow's grid, STX 1.99. And that's going to be right at that 10-period moving average as it's rising through this pattern. You'll see a bit of an acceleration. And while the interest rate viewpoint continued to move higher, there doesn't seem to be any panic. In fact, we're seeing some of the momentum start to burn off here on PPM 2 and 3, which does suggest that we could see some consolidation up here. And the minimum target above right now is the 2.12 level. And one of the things that I wanted to discuss tonight is that it's possible in the interest rate scenario, if you had to normalize rates to even get it close to some kind of number with all these inflation numbers we have out, if you're looking at CPI 7.5, PPI came in at 9.7, these are really crazy numbers. The minimum you would expect would be something well over 3%, 3.25. That would be a retest of the taper tantrum high, but the trend is clear. This is just a daily chart that I have up here. While I'm on this view, I'll go over and take a quick snapshot of the weekly. The weekly is where we should start to see some stalling here and just see at least 2 or 3 weeks in a sideways range, staying above now probably the 198, 196 level on the downside, and 205, 207 on the upside. We could print a 212 in here, but I don't think it'll be able to stay at those levels. As we look at crude oil has had a very interesting yesterday. Let me get over to the daily here real quick. This is the weekly. The daily was looking really well. We were up some decent numbers yesterday, and now we opened up overnight and we're down 2.25%. We're back down to that 89.76 number. We were remaining above that 10-period moving average, but now we're back under it. Looks like the 21's in play, 87.39 on a daily basis. We go over to the weekly charts. what we're going to see here is, from a grid standpoint, 89.69 should be about where the low is. We printed 89.72. Takes that out. We could see an 80. We'll call it 88. We'll round off 87.93. But this market should go into a sideways range for a number of days. I know a lot of this tension has been relieved from the aspects of what's going on in the Ukraine, or I should say what's not going on in the Ukraine. Next market I'll look at is gold. Gold continues to bounce back. It was pretty impressive yesterday. We traded back below that 1856 level that I've been talking about the last couple of days, and we've been able to rebound back up. We're now at 1871. Like I said, for me, coming into the last two sessions of the week, I'm just looking at us staying above the 1856 level. We can stay above there. We should be in good shape as far as gold goes, and keeping this trend in place. If we were to get back under 1837 is the minimum number. There's still support 1821, but I wouldn't want to see us finish up at those levels at this time after already printing this as high as we have in this pattern this week. Final market I'll cover tonight is Bitcoin. We continue to hover in between the 10 and the 40 period moving average. The 10 is 43.060. The lows did trade down to, this is the weekly, was down to 41.968. The key level is 41,000. And on the upside, we're looking around the 45,700 level is going to be the resistance. I don't see us getting out of this area, but what we are starting to see is PPM3 down at the bottom here is starting to tick up. So everything's starting to set up a pattern that we could at least do a Fibonacci retracement. I'll cover that probably on Sunday night, depending on how we trade over the next couple days here. Quick look at the daily chart. Daily continues to look positive. We are seeing some loss of momentum on the PPM1, but we're still seeing acceleration across the board. Everything looks like we want to move to test that 45.7 level, the potential of getting around to, or 47.200 level over the next several days. Key level, as I said, is 41,000. The extreme is 40,000. As long as we stay above that, we're just going to continue to consolidate here. Okay, folks, this is going to be the end of tonight's broadcast. Thank you so much for watching. Make sure you subscribe and like these videos, and we'll make sure that we continue to show up every day for you. So those of you in the live trading room will start at the same time tomorrow that we usually do, 1 p.m. Eastern Time. See you there. Thanks again for watching, everyone.